Alright, so today I'm going to go over my, not necessarily best trade, but one good trade and definitely my worst trade for this week. So, I don't know. I didn't have anything really stellar in any of my trades this week. Nothing I was really like, yeah, I nailed that. I think that's because I finally switched to TC2000 for my charting, so I no longer have to open up multiple windows in Tastyworks, which is a big pain in the ass to begin with for charting. So I think I was just getting comfortable with a new charting platform, had me feeling kind of off. I've had this initial 4-window screen up to watch my trades, and then when I'm like say I'm like, oh, okay, I see something I want to watch on Amazon, I flip over to a main chart, but it would be Amazon right now, it's just NVDA. But because sometimes I would take, at least the first time I took a trade, and these are after hours, so they're hard to see. Zoom out so that would look better on my 4. Like, say I was going to be watching, like, to see if Amazon would bounce off this line down here, this 190130. I would be watching it come down. I'm like, oh, okay, it's close, I'll buy in. But in reality, it's still 50 cents. This is a bad example. Anyways. But I know for one of them, I would enter and then it would bounce and I would take my trade off. I'm like, okay, why didn't that make more? Then I realized my entry was at a completely, different area than I had expected, just because I'm not used to this newer layout yet. So that'll be something that improves the time. Wasn't a bad week until yesterday, which we'll get into here in a second. Is this frozen? I don't know what that was about. All right. I think that's why I didn't do so hot this week. I mean, I didn't do bad, but I didn't have any trades that were like, over the top, other than this one on NVIDIA, which I will go over now and get it set up to my main chart. All right. So NVIDIA, they had gapped up, as you can see here, for almost $2.50, $3 somewhere in there on $160 stock. So I was expecting, somewhat of a sell-off most likely to start. But this gap up was driven by, I think they got an upgrade in their price forecast or something. I don't remember specifically. But anyways, there was a catalyst to why this was up higher than it had been over the previous, couple of days. So with NVIDIA, I was looking for one of two things. Either it to come up into this 164 area or this 165.40. So, somewhere in this area. If we go back to the daily chart, it's the kind of break from back here in the middle of May when they really kind of started their big downtrend. So I was looking for this area to kind of be where it filled in at and possibly reject. Or, because you never know. Zoom up here. I was looking for it to pull back into this 161.72, which was the previous day's low. Or actually, no, I think the previous day's high, actually. Also risking off of, this was the the pre-market lows of that day, which you can't see now because this was last Thursday. So NVIDIA opened up and I was looking to see if it shot up into this area, start going in with some puts to bring it down short, or if it starts pushing down here to start grabbing calls to take it long, which is what it did. So started coming down, and this was another time where I was watching off that this chart here, the 4x1 chart, versus my more zoomed in main chart that I should definitely be using for trading and not trying to confuse myself anymore. Oops, there we go. All right, so I got a little jumpy on that entry because I thought this candle was a lot closer to this line because of that view, but I ended up entering kind of in this area. Somewhere in this candle. I took my first 2 contracts, my calls. Once I entered those, I flipped over this chart, saw that I was still a little above, but still not worried because it's fairly early in the day. Normally in the mornings, this is the second candle. If it's in the first 2 or 3 minutes, I'm just purely looking for a scalp, but for NVIDIA, I was looking for, a legitimate trade on the day, so I wasn't really worried too much about a scalp for this trade. So I entered here. Now, I was willing to risk all the way down to this 160.50, and if that didn't work out, I would pull off the trade and reset and look down here at this 159.26, which I don't remember where that came from. It's not important right now. So I entered there. It pushed through and started to pull back up, push down again. It started to get sucked back up, so I went long I've added to my position. Still getting used to TC2000. Added to my position somewhere in this area. I don't remember specifically. So I put in two contracts, and if it made it all the way down here, I was going to add, 2 more. So that would have been my max position size. But it did start to get sucked up, so I just left it on. And on this initial push, I took off my first one, just to pay myself. You never know how the trade's going to go. Took off my first contract on this green push. So from here to here, I got, about $1 or so as it pushed through this VWAP. The VWAP definitely would have looked different because this is a couple days after the fact. But that's where I initially took my first set of profits. I then took my initial set of profits once, we're kind of chopping in this area. Then it finally pushed through. So I took my second set here. For red, just for annotations. So entered here, took off first contract. I took off 2 contracts here because I had 4 total, so I still had on 1 more. And I was originally going to, risk all the way up to here, but at this time it was a little bit later than the day and I had some stuff I needed to go do. I think the SPY might have been pulling back. I don't exactly remember. I know I was not as focused in on this NVIDIA trade anymore. I think I was in Netflix as well, just doing a quick scalp, since typically I like to do at least 1 scalp on the day, just, make some quick money for padding, and then I focus on my actual trade. I did it a little backwards this Thursday, or last Thursday, so I took my initial trade first, so I was looking for that second trade or just an initial scalp that I could use. So I had 1 more on. I wasn't really paying attention. I saw it kind of pull back here. The premiums were starting to melt a little faster than I was expecting. It was, Thursday, so it's kind of close to expiration day. So I decided just to take off my second one right here. So I ended up being completely out of my whole position from over what time period is that? 14-minute time period. And I ended up making 20% on this trade, which is about average, but pretty good. I wish I would have been a little bit more patient. I could have waited all the way up to this 164, which it did test almost, looks like, to the penny. Yeah, tested to the penny and then just kind of fell apart from there. So I could have, ideally, this is hindsight, you never know, taking it on this push or this push or this push or this lower high or whatever. Doesn't really matter. But I wish I would have been a little bit more patient. The only plus is I did, see this later on, and I just checked out what the premiums would have been. And from here to, if I would have pulled it off at this 63.84 area, 85 area, just below 164, I would have only made like an extra $10. So that patience could have paid off. It could have completely broke these highs and shot through. But I had made 20% on the trade in under 15 minutes, so can't complain. Pretty happy with that. So that was my NVIDIA trade. This is my good trade on the day. Now let's go to the bad one, Amazon. Amazon on Friday, and I already kind of have this one marked up because I was looking at it earlier. So I'm gonna put this out there. I'm not gonna cover P&L, but I will state that this was really stupid. And these Friday trades with same-day expirations on options, if you don't nail your entry, they can destroy you. This, I will be honest, completely took my green week and made it red. Made it red plus an extra day or 2 worth of work. So with the loss I took on Friday on this one single trade, I'm going to be set back at least, if I know I hit my average P&Ls, 5 to 6 trading days to recover from this loss, which I've done it before. I'm not proud of that, but it just, I know I can't. I'm not happy about it, but I'm not super worried because I can make that money back. It's not a big deal. Obviously, I would rather that I'd not made this mistake. And the only positive I can take out of this is I know if I can stop making these stupid mistakes of adding to losers on Fridays with same day expiration, I should be, doing pretty well and pretty green for weeks, if not months on end. I usually make this kind of mistake about once a month. It's almost like clockwork. Occasionally, I'll make it 2 times in a month. The only other positive, other than I know I can make it back, and if I can get rid of these, I'll be consistently green, is that they happen on Fridays, so then I don't have the next day that I wake up upset. I have the weekend to reset and kind of relax and get my head out of my ass and get things back together. But enough babbling, I'll just go into what I did. So Amazon, it was pushing back, and I was looking for a hold of this voodoo, which if you don't know what that is, it's this little dotted line here. It's the opening price from that morning. So pre-market, the very first tick of the day, that's what the voodoo is. I don't know where it comes from other than that, but it seems to be a pretty strong indicator for support or resistance. So Amazon was selling off, and I bought here at this first little green arrow. I know it is still 50 cents above the voodoo and this 1905.80 support, but Amazon, it's 50 cents. That's basically nothing. That's like 5 cents on a normal stock that's under $300. It's not really a big deal on Amazon. Its spreads can be over 50 cents, so it could have easily bought here or ticked this and then for one share and then immediately bounced back up. So I don't really look at 50 cents as anything on Amazon. So I entered in my first contract here. And now with options, the way I trade to get in with good prices and to get, good action on my premium is if, say, this is just for easy ways to illustrate this, and I don't know how to paint on here yet. So say Amazon is coming down into this 1911 and I'm risking off of this as support and 1905 as support. I would never do that because it's too big of a range. This is just for an example. So say it's coming down here and I'm looking for a long, I would buy my first contract here, and if it takes off, great, I make money. But if it comes down here, kind of chops for a minute and then comes down lower to the next level support, I will wait for that second level of support to confirm and then start to come back up, and then I will add in a second or third contract depending on the price of the premiums and what I'm trading to get a better price. So that way when it comes back up into this support, worst case is it comes back into here and rejects and I have to take the position off. So this contract will basically be worth nothing, maybe a slightly red, but the contract that I took down here will definitely make up for it and at worst case leave me at break even. So that's typically how I trade on option premiums, and that's something you'll just have to, if you trade options, you'll understand a little bit better, but that's how I am able to stay consistently green, is by using 2 levels of supporters, 2 levels of resistance, and scaling into my trade. So that out of the way. So that's essentially what I did here, but because they're Fridays, they're super cheap. Normally Amazon options are like $1,000, $2,000, sometimes $3,000 a contract. But on Fridays, they're really cheap. They're like $500 or $600, sometimes down to $200 or even $100. So I added in my first contract here, watched the confirmation here, or not confirmation, it gets sucked back up here. So I bought a second one. And it did come a little lower, but it pushed right back up. So, or my first red flag to get out would have been that this push up to 1907, and I was in 1905 calls, so my strike price was 1905. So I averaged between about 1960, 50, and somewhere in the 1905s. So I had 2 contracts there, and now they're up into 1907 area, and the premiums were still underwater. So I was still, even though above my strike price and above my average entry, the premiums did not pop the way they should have, and that's because it's Friday and same-day expirations decay very fast. You have to get really quick moves like here to here or this sell down to here to really capitalize on it. And I knew that, and I always make these mistakes on Fridays, but I don't know, I just wasn't thinking. So this popped, basically got nothing out of it, and then it immediately failed. I should have said fuck it and cut my losses, but I was stubborn and I was still risking off this 1903, so I added it on this red, I added it on this break and where it got sucked back up, and then it popped again. So I was like, okay, good, now we're gonna get somewhere. And it popped almost back into the same area, but again, for whatever reason, from here to here, the premiums did not move. So I had averaged in, and I don't remember the price, let's just say I'm averaged at $5 here. And it popped almost $3. Yeah, $3 at least. And they moved maybe 20 or 30 cents. So if you know anything about option premiums, at least on Amazon, it typically has a 40 to 50 cent delta. That means for every dollar that Amazon moves, the premiums should move about 50 cents or 40 cents. For $3, they should have popped by about $1.50. They didn't move basically at all. They didn't even move a full 40 to 50 cents. It was right there again that I should have realized now 2 times in a row we got pops and no movement in premium, that I was going to be screwed and this trade was not going to work out. But I'm stubborn and I just kept letting it go. I don't know why. Can't do anything about it now. But I entered here, risking off here, and if this had been Monday through even Thursday, I could have gotten out here for a break even or a small green, or here break even, small green, and everything would have been fine. But because it's Friday and because the meltdown is real, the theta decay is real on Fridays. It just did not work out in my favor. You can see it completely fell apart here. The only thing that made me keep this trade on was through this like $7 drop. The premiums didn't really drop that much either. They decayed fairly slowly down to here. And plus I was stubborn. I was really hoping we would get, like a drive back to highs or something. I don't know what I was doing. I shouldn't have held this trade for as long as I did. Then we eventually, got this pop again back up into the 50 EMA. It had moved again almost $5 at this point, and there was barely an increase in premium. And finally, after the third time of seeing that and it coming into this resistance and underneath the VWAP and the VWAM and then all these other areas of resistance, I just decided to pull the trade off, and this was not a great trade. And I'm glad I did, because it could have gotten way worse. Amazon really sold off at the end of the day. And yes, it did come up back to this 1905 area, but I was, I saw this and I just checked the premiums just because I was curious, and they were still at the same price up here at 1905 as they were down here at 1900. So probably a good idea that I took it off when I did, because it just wouldn't have gotten any better. So that was definitely the worst trade I took on the week. Where did I exit? I'll mark it here, somewhere in here. It might not have been exactly at this 50 EMA, I don't remember, but it was right around this area. So definitely something I need to work on. That's what's easier to see. With my Friday trades, I've been evolving my rule set, and I'm going to evolve this one as well. So my new thing for Fridays is don't take same day expirations. I don't care if they're more expensive. I will go out a week. It's not to say you can't take same day expirations. I've done it before and they work really well. They're really cheap, but just for me, for right now, while I'm still in this learning phase, it's just not worth it. I would rather, be able to capitalize on these small moves when I'm wrong to still be able to get out even like I do Monday through Thursday. So worst case scenario, I just end up flat or, maybe small red versus an entire week lost in a matter of 45 minutes or so. So that's what I got. Ended the week on a rough note, but not worried about it. I'll be good to go. I'll start off conservative on Monday, size down, get my confidence back. Next week's also a short week because of the 4th of July in the US, so volume will be a little bit low as well. So I'll probably just take next week to be sized in small, be cautious, be more patient, because it's going to be an off week in addition to me coming off this loss, and I'll be back to break even on this. I don't want to give myself a hard time frame, but probably in 2 weeks, worst case scenario. So not super worried. It's not ideal, but it's not the end of the world. And that just also goes to show that bad days happen. Sometimes you make mistakes. You want to minimize them as much as possible, but just knowing that you can come back from them is, gives you some peace of mind. So next week I'll try to do some recaps again. Hopefully I have some better trades and my bad trade is very small, if I have one at all. So I'll try to start uploading these weekly, just to try to track my progress and talk myself through some of my good and bad trades so I can identify what's working for me. And as always, like, subscribe if you're interested, and leave any questions down below. Thanks, guys.